Trading Nut, episode 17.
The day that you become an independent thinker and you don't care what anybody else thinks or says, that is the day that your trading is going to start to go through the roof.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to the first real episode of 2019. So glad that you're here listening to the podcast. Now, look, if you haven't subscribed, make sure you subscribe to it. If you haven't left a review, make sure you leave a review. Pause the episode now. Go off and do that right this second. Now, we've got Chris Laurie up on the show in just a few minutes. It's a fantastic interview. A trader that I've been looking to get on the show for a long time. I'm so glad that I've managed to get him on, and I know a lot of you are eagerly waiting to hear this interview. I first heard of Chris through another guy who's been on the show. He's my own mentor, Andre Stewart, and he sung his praises through the roof. So I'm so glad to get Chris on the show, and I guarantee the show is definitely not going to be a disappointment. So guys, listen right to the very end because there's nuggets in here. You probably want to replay this a few times. It's like a summary of somebody's lifetime of trading experiences condensed down into less than an hour. Okay, so it's coming up in just a second. Now, before we get into it, new year, new you, that sort of thing. Does that ring bells? Well, look, different things happen around the holidays. You hear from different people, you see different things. You're out of your routine. You're with family, you're with friends. You're doing different things. Now, where I live, it's summertime. It's hot, so I end up going to the beach like 5 or 6 times, and spending a lot more time with my family. So my family's out from Australia, and one of the things my brother got me onto, which I'm thinking of doing. I'm very, very serious about doing this, and I want to know if you guys want to come on board and join me in this as well. It's something he's been doing for the last year. Now, it's basically called fasting, okay? So, but it's not fasting where you are like not eating for days on end. The way he does it is like, it's almost like an intermittent extended fast, okay? So an intermittent extended fast, which means you basically miss out on breakfast and lunch. And so you only have dinner, and then on the weekend you do whatever you want. So it's 5 days where you're basically, and the reason to do it is to heal yourself, okay? Not necessarily to lose weight, but you will indirectly lose weight. You'll feel better. Apparently, he says mentally, he's just so switched on by the time the afternoon rolls around, and he has these amazing sleeps. So, guys, if you want to be switched on by the time the afternoon rolls around, feel like you got lots of energy, get a lot of sleep, heal yourself at the same time, then leave a comment in the show notes. So head over to the website, leave a comment, let me know. And the book's called The Complete Guide to Fasting. If you want to join me in a fast, or let's try and do this for a period of time, then leave a comment and let's do this, okay? I mean, because one of the things he got me into doing it was he cooked up this pizza last night, and I've got to say it was a really, really nice pizza. But he did the base, and it was called a fat face pizza, okay? A fat face pizza, and the base was 0 carbs, okay? A 0 carb base. And this was because he was doing this ketone diet back in the beginning of last year, and he moved on to the fasting thing. So, some interesting stuff here, guys. Just let me know if you want to join in. Leave a comment in the show notes, and maybe I'll put a little note in there to remind you as well when you head over to the website. And there'll be links in the description as well. Right, now that's my little interlude. Let's quickly talk about some other things that are going on here at Trading Nut. So, as you know, I've got the Robot Traders Club, where I've got basically every month I'm releasing a new trading robot to the members. If you want to find out more about that, I've got some little videos up on YouTube that give you a hint as to what's sort of going on. I mean, I get these daily statements, and I'm sort of trying to share them where I can and when I've got time. But like today, for example, this one robot I've got running, and it's one of the newer ones. It's 1, 2, 3. Let's have a count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades in a row. Okay, on that one day, and it won every single trade. So look, I'm pretty bullish on this one. I'm pretty bullish. And the day before, it was something like a 90% win rate. And the day before that, when I did the actual video up on YouTube, it was like a 92% win rate. And the risk to reward is a bit different from what, it's not a standard straight risk to reward, but there are some really massive, 3-to-1 trades. And then there are some where it's not that. Okay. So it's just the way the strategy works on that particular robot. There's other robots, and they come through with their statements, and they're starting to tick along, but they're not placing as many trades as 11 or 12 in a day. So, guys, check that out, Robot Traders Club. There's an actual guide a free guide that I've put up on the website as well. So if you head over there to tradingnut.com, you'll find that guide there, and you can download that, have a read through, and learn a bit more about trading robots as well. We've also just kicked off the demo trading edu contest. I should have chosen an easier name for this, with Gary Fullett. So if you guys want to check that out, I think you can still get in the door, even though the actual education part has started. It's all recorded, so you can actually dive in there and pick that up now. But once the contest starts, which is in less than 2 weeks, then that's where you'll be competing against the other students to win your tuition back and a little bit of cash as well. So, guys, there's one last thing before we get into the show. If you don't know, if you're new to Trading Nut, this is the first time you're listening to it, or if you've listened to the last few episodes and you're liking what you're hearing and you want to hear more, then you can actually fast track a lot of your learning by jumping onto the site, and you'll see that I've got the 52 Trader podcast up there as well, and there's 150-something episodes, and you can actually now buy, and I made it so that you can buy individual episodes, okay? So individual episodes are up there for sale, so if you just want to pick a trader that you want to hear a bit more from, you want to learn something from, you want to take some knowledge away from, then you can basically go on there, and for a very low price, less than $10, you can actually pick up that episode and get the show notes, which some of them include video, some of them include marked up charts, and you get access to that. And if you do want, you can actually, for a one-time fee, buy the entire 52 Traders podcast. Okay, so if you want that for a one-time fee, that's there as well. Now I've made that available in the last few days. All right, folks, I think it's time to introduce Chris, get him on the show, and hear how this guy does what he does. All right, guys, without further ado, here we go, Chris Laurie. All right, folks, so here we are on Trading Nut. We've got Chris Laurie on the show. I actually can't believe I've got you here, Chris. I think I reached out to you a couple of years ago at the first time, and I'm glad we finally managed to lure you onto the show. So how are things over there in Singapore?
Fantastic. Singapore is a great place, and I enjoy being here. I spend probably, maybe a little bit less than half my time here now. So I go between Singapore and the States or North America.
Oh, really?
These days.
Oh,
yeah.
Okay,
yeah,
half your time there. Last time I was there was I got stranded there for a day in transit, and I screwed up my flights. I thought I was supposed to leave at 8:30 in the morning, and I thought, oh great, I've got 3 hours to kill. And it was 8:30 at night. I even got through like the first couple of gates, and the guy's like, "Hang on a sec, mate, you're not on this flight." I'm going, "Oh, is that why the number was wrong by like 1?" And I was like, "Oh, great, okay, I've got a t-shirt, jeans, and it's 35 degrees with like 100% humidity. I've got to spend the whole day here." I got through. It was good fun actually.
Enjoy your time sweating if you step outside.
Yeah, exactly. Right, so I tell you why I wanted to get you on the show so badly was because we've had a couple of your students on here who are actually like really successful in terms of what they've been doing, and I thought, look, if the students have been successful, that the master must be unbelievable. So it's great to get you on the show finally, and hear your story first, and then give the listeners some advice. So really looking forward to this interview.
Great, it's a pleasure to be here. I appreciate you having me.
So let's kick in with a bit about how you first got into trading and your journey up. I mean, really want to hear about the journey that you took and the detail around, turning points for you. Which I mean, I've seen a lot of your videos, and I've heard the general story, but I don't know if I've sort of got into what was the turning point and when did things really start to click.
Okay, so maybe some of what I say here we might end up revisiting further on in the interview, but really, I grew up in a family where there's 8 kids, and my father taught us to be financially prudent. We had to, finance our own things. Depending on how old we were, we had to finance our own things up to a certain percentage of whatever it was we wanted. So it taught us, mindfulness of money management, and then also to be resourceful in order to go out and earn the money. And basically, it was formative of our ethic in terms of how we valued money. And then as I got into my teens, I became a little bit more interested in, the mutual funds started coming out, and I just became a little bit more interested in investing. And then as I got into my later teens and my early 20s, I started following the equities market a lot more closely. Back then, we didn't have internet and all that, so we'd open up the newspaper and check stock quotes and so forth, and see how much we were losing at the time. And because when you first start out trading, it's a bit of a rough go, and so I was really quite profoundly interested in trading and in the financial markets. But of course, I was also in a sport career, and so I decided to maintain my sport career because I figured, well, at some point in time, my body's going to expire, and I'm not going to be able to engage in these types of experiences any longer. That will come to an end. And so whereas anything, work-related or academic is something that I can always do at a later time. So I continued with my sport career until I was 35 years old. But in the interim, I was continually studying the financial markets in general and just dabbling a little bit. And then I retired at the age of 35, again, after my 4th Olympic Games. And at that point, I did have a few options to work for some institutions, but more or less, just on the sales side in terms of investment advising. And I'm not very good at sales. So I figured, it probably wasn't a role for me. And I also felt that I operated fairly well independently. And so I started to engage in trading. And then I saw that foreign exchange and online trading in foreign exchange was emerging. This was in 1998, 1999. And so I began to study the foreign exchange market and began trading a lot more actively in 2000, 2001. And it just went from there. I linked up with a mentor in 2002 who really pulled things all together for me in terms of research and really becoming intimate with the market structure and price behavior. And he was able to trim up all of the loose ends as it pertains to defining your psychological profile as it relates to trading, and how to best lean yourself out, your mind, your mind, how you think, the processes, the development process. He just refined it all to a point where I was able to marry my psychological profile to a specific type of trading. And to me, that was a real turning point for me. And from there, things really began to accelerate. As well with him, we managed some funds together. If people are wanting to know his name, he's an underground trader, independent guy, and we just came together. And so he can't be found, nor would he want his name disclosed. But it was a phenomenal point and support base for me in the critical years, in the early stages.
And so the study you did before the mentor, I mean, how did you find that? Was that sort of, did that set you up, or was the mentor the one that tipped you over the edge? How did that work?
Yeah, so I think that anybody who has an interest in trading, they'll of course start out with doing some research online and try to access as much free information and available information as possible. And it's fairly randomized at the start, and this is normal for everybody. Is I call it the discovery phase, and so they tend to run around after looking for things that are simple or looking for concepts that they can grasp right off at the start, even though it's not in flow with how they think or how their psychological profile operates. So I think that every trader goes through this, and it's a part of the overall development process. And so I did this for like probably a shorter period than most, but like 6 months or so before I really started to take to price behavior and price action. Although there were still some loose ends there, but that's the way it was for me. It was probably no different than anybody who's listening to this program. And then I was able to see it more clearly, because also what my mentor had done was he really, really put me through the grind in terms of intensity of exercise and very focused look at certain details of the market, which we can discuss if you like. So, but in general terms, that's, you go through the discovery phase, you look at what's available in the marketplace, you decide what might connect with the way you think, and then you kind of start to refine it from there.
And so just painting the picture of this relationship you had with the mentor, I mean, how close were you with him, and how many years? I mean, were you like spending 8 hours a day with the guy, or were you just sort of touching base now and again? How intensive was it?
It was pretty intense. We were in different parts of the world, but it was about a 2-year period, and he was, he's a very bright guy. And what we would do is we would break down specific aspects of price behavior. So he would give me assignments. He would say, here's a price behavior. Now I want you to go through, X number of months of charts and pick out this price behavior. And I want you to pick out the price behavior and look at it at different time levels. And so looking at one specific item, and literally till your eyes are bleeding, and we would do it for days on end. And then once we refined our understanding of that price behavior, then we would start to use it in the trading profile. But a lot of them, you just discard as well. But the price behaviors that you discard or that are not of any use are still actually of use to you from an internal standpoint, because now you know that this price behavior, if it's expressing itself in a certain way, you know that the information it's providing you with is not of value, right?
Yeah.
So because, for example, in Pro Traders Club, what I do is I will define certain price behaviors. I will have the members go through it, and through the course of exercises, so that their brain can connect with market behavior and specific market behaviors. And so you'll go through these exercises. Then you'll have call it negative outcome, positive outcome, and neutral outcome. Okay, so when you go through an experience with a price behavior, and all of you who are listening, you've all been through it with whatever model you're applying or whatever tools you're applying. You've all been through negative outcome, positive outcome, and neutral. Okay, so the negative outcomes. So if you got a sample size of like 100 or 200 exercises with a certain price behavior, then the negative outcomes have been internalized in your brain, and you now will have a relationship with that negative outcome. So when that type of price behavior is expressing itself in a negative way, to stay away from it. Or if you're looking to get into a trade and you see this behavior, to stay away from that trade, or that aspect represents risk to that trade. So So when you go through the course of these exercises, you're literally internalizing market structure and market behavior. So the point I think I want to make here is that it's very, very, very specific, and you have to go through the process. So I liken it to this, is that because I want listeners to really understand what I'm saying here. So, for example, I went through 15 years in Olympic sport, and so I established processes, and the processes were so highly refined. And the processes when I was in my 15th year were far, far different from those from my first year, second year, third year. It got better and better and better over time. So after the end of 15 years, I was so deep in my understanding of processes in terms of establishing a positive outcome that it lives inside of me. So then I just adapted, and this is one of the things my mentor helped me to do, is adapt that experience into trading. And so what I'm saying to people who are listening is that you all have been through a process of having succeeded at something. So you started at point A where you knew little or nothing about that which you were about to venture into. Then you engaged, you started the learning process, and then you had a general path on which you were going to follow to achieve your goal within that discipline, and you engaged in a process, and then you achieved success in the end. So everyone has been through this, and so it's important to understand, reflect on, and understand how that process went, and then you can apply it to trading. And I find what happens is that there's two really important factors in trading. Is that one, I see some highly, highly skilled people come into trading, but they're not patient enough to engage in due process. So I find it a shame, and it's wasteful, because I see people wanting to jump the gun, but they don't want to take the time out to build a proper foundation upon which they can move forward. This is why a lot of traders are looking for copy me systems. They want to just see what another trader does and try to do exactly the same thing, and then therefore they'll be successful. It doesn't work that way, because the trader who is sharing this information with you has probably gone through, has a very, very broad and deep foundation upon which they're making their decisions, and a lot of experience behind it, where if you have no experience and you try to copy what somebody else does, your entire lack of experience represents risk to you. So the point here is that you've all been through a process of going from point A to point B and succeeding, and you need to understand that and apply that to trading, and have the patience to go through the proper process. So one other point I want to make that's, I think, is really important, is that wherever we go on the internet, we read about one has to have a trading plan. But that is getting ahead of yourself. So when you get into trading, even if you've been in it already, let's say, a year, 2 years, 3 years, you don't know what you don't know, and you don't know what risk is risk to you. What is lacking in the trading space in terms of bringing traders to the true fruition of being a trader, that the trader lives inside of you, is that they don't engage in a development process. And someone who's mentoring them, really understanding the development process, bringing them through the development process so that they really understand market structure and the tools that they're using to trade at a deep level. And once you work through that, then and the trader develops inside you, you can never take that away. If you're just trying to copy what somebody else does and it doesn't work, then you're really left with nothing. So it's important that you've all been through something in your life where you've gone through the proper process, you've succeeded at it. Now that experience can never, ever, ever be taken away, and you understand it in detail. So it's important to have a very clearly defined development process. And so what we do in Pro Traders Club is we say, look, here's the price behavior. We know that this price behavior manifests itself in this way, and this is why we have consistent outcomes as it pertains to this price behavior. So now we need you to learn it. We need to marry your brain to this price behavior. And so the reason why it's important to go through the exercises is because if person A goes through exercises on that price behavior, they're going to do it in the way that their brain thinks and the way that their brain sees things. Person B, they're going to engage in the exercises the way that their brain, which is unique to them and different from any other, the way that their brain sees it and the way that their brain engages and the way that their brain internalizes it to their character makeup. So each individual is gaining regardless of who you are, you're gaining a profound experience in connection with price behavior that becomes uniquely your own. And so therefore the trading is becoming your own. So so you asked me earlier about like call it breakthrough points.
Yeah.
I had there's a couple of breakthrough points, but the one absolute distinct breakthrough point is that the day that you stop leaning on somebody else telling you what to do is the day that you become an independent thinker and you've built that knowledge base through proper procedure. The day that you become an independent thinker and you don't care what anybody else thinks or says, that is the day that your trading is going to start to go through the roof. Okay? You can't wake up to one day and say, today I'm going to be an independent thinker. What happens is over time you develop such a profound knowledge base that you're like, I'm finding that my own instincts are far, far, far more accurate and more consistent than what anybody else in this chat room is telling me, what anybody else on these blogs are telling me, what any other, supposed guru is telling me. This is uniquely my own. And now I don't, really, you can still use resources. We still need to access resources to get a general tone of what's going on in the marketplace, of course. But when you make the decisions all on your own with parameters that you've created, then that's the day that your trading really starts to skyrocket and become consistent, and it becomes profoundly your own. That's a very, very important point to arrive at. So if somebody tells me I'm a break-even trader, then I'm like, you're almost there, because even being a break-even trader, it's a sign of your own independent thought.
Right.
Really
yeah.
And that you've got things under control. So, but I'd say that's critical to bring yourself to that point.
It's interesting you say that. So last night I watched a video where there was a guy who I was lucky enough to watch it, who walked through his system and something he'd come up with himself, and was doing very well from. And I looked at it and I was like, yeah, I see it. I can understand it, but mentally I don't resonate with it. And woke up at 6 o'clock this morning and spent 2 hours marking up charts, and instead of just marking them up and mentally going, okay, this is how I'd enter the trade, I thought, right, I'm going to actually write this down. And I came up with 6 or 7 potential setups across the course of a couple of sessions. And I mean, I don't know if I'm feeling pretty confident, because this is my sort of culmination of a few years worth of education and trial and error and whatnot. And I feel like now this is what I've developed, and this is how I see it, not how this guy sees it. But I can still see what he sees, but I'm just not for me, if you know what I mean.
Correct. Exactly. So, because you can still extract value from the teachings, and sometimes it's just, a lot of it is just a way of thinking, understanding their way of thinking, whereas the actual tools that you're using, maybe, you see some value there in terms of how they see the market, but then just apply that tool to the markets as it pertains to your way of thinking.
Yeah. And I think it's hard for us humans to really grasp that concept, and And even to the point where it's like, how do you go from wanting to, just copy me approach to I'm going to develop my own thing? That even for most people just takes a long time to grasp.
Yeah.
And have you got a hack for that? Is there a simple way or something you can recommend?
Yes. So one of the things that I do with students is we retrain their brain. So I will give them specific exercises. So let's say, for example, you're watching, let's say you're intraday trading, you've got your chart opened up, maybe you've got a 15-minute chart opened up, and you see that price is that in your brain, you're thinking, geez, I think maybe it's going to rally. And I'm speaking in a very, simplistic way in terms of how a new trader, a new retail trader might be thinking. And so they look at price and maybe they got a few parameters laid out there and they think, I think it's going to rally. And so then price, over some period of time, it starts to rally or show hints of rallying. And then they're like, as the more it starts to rally, the more they're thinking that, yes, it's going to rally. Okay. This is how, newer traders think. Then once it really starts to rally, then they're like, see, I knew it would rally. Therefore, I was right. So I'm going to enter the market now. Meanwhile, it's moved 20 pips away from, its original, its original state, and the trader will enter. And then, of course, it usually ends up badly. And so what we do is we retrain how the trader thinks, which is typically contrary to what the brain naturally desires. Okay? So we want to train the brain so that it becomes more comfortable with price behavior, where previously you became very uncomfortable. So we're actually like just really completely changing how the brain sees market behavior. So, as a general example, the way we take long-term positions is that when the pendulum is swinging, and let's say, for example, one might think, well, all of this fundamental information comes out explaining why the euro is rallying. So as the euro is rallying and all of the fundamentals and the data support why it should be rallying, and the more market conversions they have, and the more and more this builds up to the point where, the broader marketplace believes the euro should be rallying and it should rally further, that's when we're starting to sell. So it's really typically quite contrary to the existing market mindset at that time. And so while we do it on long-term time frames, I also do it on short-term time frames. So when the market is moving in one direction, I'm looking for points. So if we want to break it down to how does the intraday model work? So the way my intraday model would work is I am a purely price action based trader for the intraday model. So what I will do is, and you may see on some, even in the videos in the free members area, which only is really a wisp of vapor of the content, but you'll see that the way things are explained there, as price is rising, the state of liquidity around price and why it's moving and where it's moving to is changing. So as price is rising, it's getting weaker and weaker and weaker. And I'm looking for a point at which there's deemed to be a liquidity pool. So there would be a pocket of liquidity there. You can't necessarily see it. You can if you understand the charts in a certain way, but you can see the liquidity exists there. So I'm looking for a weak move into a pocket of liquidity where there's going to be strength. So I'm looking for the reaction off of that level. So as price is rising, I'm looking to sell when others are looking to buy. Okay. Right. So in simple terms, that's kind of what it looks like. So with most folks, we have to retrain how they think and how they see price. but what happens is we engage them, and then as they start to see outcomes, they're like, wow. So their brain actually changes around how they think about certain price behaviors, so it becomes completely reversed. Okay, and so that's effectively how we trade in the intraday model. So so we have, when I say we, I have one trading partner, and it's never just an I. So and life is never just an I.
Yeah.
But so what I do is we understand price behavior at its deepest level, and there's a couple of basic videos in the free members area there, and that you can see. So we understand price behavior at a basic level. And so what I do with traders, because some traders might come to you and say, look, I want to be a intraday trader. Some might say I want to be a swing trader. Others are, I want to be a position trader. So in our models, I'm using the exact same execution and parameters for the long-term positions as I am for the short-term positions. And here's how that works. So when we study price behavior on the small time frames, and we go down to, like tick charts, and we call it T5, which is like 5 ticks in a bar, and 1 minute charts. And so I get traders to understand price behavior as it relates to the order flow and what's happening in the banks and in the interbank feed, and how that's delivered to you, and what you're seeing on your chart, and really exactly why you're seeing what you're seeing in terms of the price relationships, because it's all very geometric. Okay, it all makes sense. So so then we train them to understand price at its deepest level, and one might say, well, I just want to be a position trader. So here's why it's important: is you're getting a really in-depth understanding of price behavior. You're connecting with price behavior on the smaller time frames, 1 minute, 5 minute, then 10 minute, 15 minute, and you can see the exact same price behaviors express themselves on the 15-minute chart as the hour chart, 4-hour, daily. It's just the tempo and the time duration over which the price is expressing itself is different. The tempo is obviously much longer for longer time frames. So I'm literally, so the way we trade is scalable. So I'm taking the exact same type of entries, an entry type of parameters on an intraday trade that might last 5 minutes to maybe a few hours. I'm using the same execution parameters on a daily chart for trades that may last several months or longer. So it's just the understanding of price behavior is scalable. So when you put in the time and internalize the price behavior, then you can scale it, because what will happen is some days, for example, I'll be in front of the charts and I'm like, I got a good rhythm, I've got good concentration, I've got a good connection with price, I'm going to make a few trades today. And it might be, maybe it's just 2 days that week, because I'm kind of, I don't want to say semi-retired, but I don't have the same pressures on myself that I put on myself some years ago.
Right.
So I'm a little bit more casual in some sense. But the days that I'm in rhythm, I'm executing in a certain way, whereas some days it doesn't really matter. I'm just managing the longer term positions, just watching price, checking out the fundamental flow, and just staying connected to the market. But once you internalize this price behavior, when you are focused on the shorter time frames, you will internalize the price behavior at a much faster rate. So what a lot of developing traders will do is they'll say, okay, give me a plan. I'm going to step 1, step 2, step 3. I'm going to execute it, and then I'm just going to sit on the trade and sit and watch the market until it either goes with me or against me, or whatever might happen, or you fall asleep. Now what I do with our traders is I say, look, if you've only got 1 hour a day or 2 hours a day, we can put you to work during that time period. So we're going to give you some exercises so that you are connecting with price and you are working and you are focused and you're actually producing something every minute you are in front of the charts,
right?
As opposed to just sitting there waiting for something to happen because someone gave you a 3-step approach to trading. It makes no sense whatsoever. So we put them to work, and because everybody's in different time zones and everybody has a time zone complaint. So you know, the 24-hour aspect of the FX market is, you know, it's good, but it's not good in a lot of ways. So we want you to make full use of your time while you are in front of the computer, and we will give you exercises, and you will be internalizing price behavior, whatever time it is that you are available to sit in front of the charts. So you're actually producing something, you're growing, you're developing, you're seeing things more clearly, and so there's a measurable change with the time that you've invested in front of the charts.
That makes sense. Yeah. So it's, I mean, you're giving them that attachment, and with that attachment comes the change. Makes perfect sense.
Yes.
So
definitely, because
because
the more you exercise, the more clear things become. So you start seeing stuff on charts you never ever saw before, of course.
Let's get some of this. Can we get some of the stats around your intraday trading, just so that to give the guys a feel for, like, you know, if you're going to sit down and across a session or a day. I mean, you said today, you know, you need to get going before market open. Do you want to give the traders some stats, like around how long your trades would run for, and you know, winning percentages and risk to reward ratio? I think they might find that useful.
Yes. So the other thing that I think is important to point out is that a trader. So when you start trading, you can start out with maybe like a standardized, what we call a risk model. So so what happens is you go through, you engage in the development process. As a result of the development process, your trading plan will formulate over consistencies that you see. And when you start to identify consistencies, then you start to identify trades. Okay? And so you go from exercises to finding high probability type trades that you keep seeing over and over again. You trade a little bit of money, then you trade a little bit more money in, and then you're just trading on that one type of trade. But then the more you study, the more new types of trades start to come into your portfolio. So while you're developing this model, you're also developing, through the course of the exercises, you're also developing a risk model. Now you can start out with a standardized risk model, and it might be, you know, like a standard risk reward type model, or, you know, there's virtually countless models, and for every trader there should be a different model, but customized to how you think, right? So I use for the intraday trading, which is different than the swing and the long-term positions. For intraday trading, I will use an average gain to loss ratio. So your overall, so you're going to have positive outcome, negative outcome, and neutral, so break evens. So I'm taking over a sample size of the last 50 trades. What is my average gain on a trade? What is my average loss? And then, of course, what percentage are break evens? Because those percentages are constantly changing, right? And so the way the average gain to loss ratio works is that I will open up my trades typically with a stop that is wider than my first profit target, or even my first profit target might even be my full profit target, because we are trading volatility. We're not trying to pick tops and bottoms. We're trading movements. So our profit targets will range from, say, 10 pips to 30 pips. And so the stop will open up sometimes the stop can open up at as much as, so it's a maximum of 0.25 of 1%. Is a maximum that opening stop is going to be put at. It's a maximum risk of 0.25 of 1%. Okay, none of this 2% business, okay? Because you have, that's a whole other story. Because if you put 2% per risk per trade, if you take literally 2 losses, you're already breaking psychological thresholds that become very difficult to recover, okay? Because a risk management model must account for, a risk management model is to protect your psychological thresholds. So where your brain starts to see things a different way, and then it changes the manner in which you trade, okay? Right. Very, very important.
Yep.
So every highly successful trader has a risk management model and protocol that protects them from themselves. Extremely important. We can talk about this in a moment. So I'll use an average gain to loss ratio. So I'll start out let's say I'll open up my stop at, let's say, 0.25. But because we understand price behavior and the price relationships, and we can literally see everything playing out on the small time frames, and once the price behavior and the order flow starts to change, if it starts to change in our favor, then we're immediately moving that stop up tighter. So it gets really quite tight. So it might go from 22 pips to 11 pips, then to 4 pips, and then maybe to break even, depending on how your entry ended up being. If it's moving against us, so only a certain percentage of the time, let's say about 1 in every 50 trades, am I getting hit full stop. The majority of the time, the losses are only fractional. So they might be anywhere from 3 pips to 11 pips. Okay. So they're usually, 1 or 2 out of every 50 will be, a full stop, where the rest are less than my initial profit target. The first goal of every trade is to secure your equity. All right. But in order to do that effectively and consistently, you have to understand the price behavior, or whatever model you're using. You have to understand the intimacy of the tools that you're using. This is why. So if I'm trading intraday, I'm taking usually a maximum of 3 trades. So here's a few things that you may want to consider. So maximum 3 trades. So my profit targets. The thing is that I don't really want to get into explaining. There's a difference between a retail trader who wants 5% a day and the institutional trader who's perfectly content with 0.2 of 1% a day, or half a percent on a day is big. And besides, what's the 0.5% on?
Yeah.
What portfolio are you referencing in terms of that 0.5%? Because our portfolios are all divided up. So we have long-term positions, we have swing, we've got accumulators running, we've got accruals, we have intraday models is contained within the broader portfolio. So we're usually referencing the intraday percentage performance as it relates to the amount of assets allocated to that part of the portfolio. Okay, not necessarily the broader portfolio. So I don't want to make things too confusing, but it's just important to understand in context. Yeah. So I'm just if I make 3 trades in one day, that's quite a lot. And because every trader also needs to know, you also have to have thresholds, not only loss thresholds, know when to step away and how to deal with when you step away. Everybody needs a strategy over when I go through drawdowns, how I deal with it specifically, when I withdraw and how I deal with it. Also, if you have a stream of successive trades, your psychology is also changing. So then you also need to know when to withdraw and how to re-engage if you have a really good streak going, because the next trade could be the first of 10 losers. So we're usually looking for fractions of a percent per trade is perfectly fine with us. And these days, I go through phases because I take some time away from the highly intensive trading. So I might engage 2 days a week, sometimes 3 days, and maybe sometimes 4. But I'm still in front of the charts every day. But there's also other stuff to manage because we're managing long-term positions. But I'm not as intensive as I was like 7 years ago or 10 years ago. So again, it's because I don't want people to misunderstand. There's a differentiation between trading like a retail account and your aspirations, the important thing is this, here's what we tell our traders is, okay, here's the exercises, here's the process by which you will internalize market structure. It's going to become your own. So you're going to have a unique relationship with the market structure that you've connected with. Now, once you're finding highly consistent patterns, then take that one pattern that you're ready to go live. So you may have done a sample size of like 100, 200, 300, maybe 500. You're going to know that price behavior really well, and you're going to know the probabilities of it. You're going to know exactly how to manage risk around it, because all of this would have been formulated in marrying your brain to this price behavior. So then you say to yourself, well, I want to take this one live. If you take it live, you take it live on a small amount of money, and you slowly build up equity by bringing this trade to fruition. In the meantime, you're still doing your exercises, and other trades are also developing. So then you might find a second type of trade. So now you've got your one trade. Maybe it's like a pound dollar, looking for 15 pips on my 15-minute chart. I've identified good, highly consistent price behaviors. This is what I'm looking for. That's my trade. You start out, you trade it with a small amount of money, and you slowly build that up. In the meantime, you're going to start to see other trades, because all of the exercises that you're doing are not only complementing your understanding of the trade that you've already brought to fruition, but they're also all complementing the other trades that are in development. So maybe you end up coming out with 2, 3, 4 trades that you really, really like, and that's all you need. You can trade one currency pair, a selection of 4 different types of trades, and that will keep you very busy, very consistent, very focused. And I know everybody's different, and I don't ever like to put down how anybody trades, because everybody is unique, and I believe that everybody has a successful trader living within them. You just need to know how to find it. So, but I'm not a believer in that one should be trading 10 currency pairs, because the more dilution you have, the less focus you have on understanding and building an intimate relationship with a specific space in the market. So you only need your niche to go into the market and make money. And once you've established that, that's all you need. And you don't need to find 20 currency pairs and be in the market in all directions and lack focus. So, but again, everybody's different, but what I tell traders is this, that if you're making one trade a week and you're not successful, then making 5 trades a day is just dilution, and you're not going to be successful. So you have to build it up through the course of exercises, and then slowly bring yourself into the real world. And this will give you lasting effects. It will literally last forever.
It's like riding a bike, basically.
It is. Yeah. It is.
So before we move on to my next question, so around profit. So you talked about you stop and moving your stop up, which is I think quite unique. I don't think we've ever heard that on the show before. What about profits? I mean, how do you move your target closer to your entry to take some money off the table or anything like that, or is it just a fixed profit, or is it very flexible?
It's so as a pretty standard rule, because we're trading the intraday volatility. So a lot of the stuff, for example, my levels, my tradable levels are typically coming off of this around a 30 to 60 minute chart. Those are the levels where I'm looking for a price response. That's going to warrant me the movement off that level. That's going to consistently give me anywhere from that 10 to 30 pip range. Okay, so what I'll do is, so you set the stop, and the first limit order cannot be compromised. Okay, you have to be highly consistent in that your first limit order can't be discretionary. It has to be a limit order, because volatility might just come back, hit your limit order, and then run against you, right? So or run back to break even or through break even. So that first profit level has to be a limit order to maintain consistency, because your brain, number one, price might just hit that level so quickly that your brain, completely, as price is moving, your brain is always changing, right, in terms of its understanding of where price might go. And every time price moves, it throws something at you that you never expect, that you never kind of expected, in the sense that nobody knows exactly how price is going to get from A to B. We understand the probabilities around certain movements, but the exact path it's going to take, nobody knows. So price might just come up, hit your limit, and then move against you. So if you leave it up to your brain to decide, I'm going to take my profit here, you won't do that consistently. So we have the first profit is a limit, typically 11 pips. We may take everything out at 11 pips or just a fraction, depending upon how profound we feel that level is, and the reaction off that level, and what it's done at that, what price has done at that level. So because it's hard to explain the visual here, but we look for price rejection characteristics, and if it's showing strong signs of price rejection characteristics, then we're going to leave a percentage for it to run a lot further. So we're looking for, I never like to have numbers in mind in terms of a goal, in terms of what percentage do you want this trade or this week or this month. We're looking for the management of risk over the period. So if I can say one thing, if you are to, let's say if you are to want to manage money, and you went to a fund of funds where they say, we're looking for FX traders, we want to see your performance to determine whether or not we want to allocate some money to you. The number one question they're going to ask you, and the main thing that they're going to look at, the most important thing that they're going to look at, is they're going to say, give us a mark-to-market valuation every day at 3 p.m. of exactly what the value of your portfolio is at that time. And they're going to measure the equity volatility. And if your equity volatility is high, they don't care if you went to them and said, I made 50% in the last 4 months. They're going to actually see that as negative. They're going to look at your equity volatility, and if it's high, and it's not even high, even just outside of a very tight parameter, they're going to say forget it, because they know that every trader is going to go through a period where they're going to experience 7 or 8 or 10 losses. And if you're trading and you have high equity volatility, that means that you're going to go through a drawdown that's going to break psychological thresholds that you will not be able to recover from. They know that because they've seen it 1,000 times. Yeah. So they know what they're looking for. So this is to tell you that it's not different for you, and that you have to engage in these disciplines, otherwise you'll end up with the same result.
Cool. Right. Now, I know we're sort of cracking on with the time here, and I've got tons of questions to get through, so I don't know if we're going to get through them all, but hey, look, we'll give it a good crack here. So, cryptocurrencies, what's your view on them, Chris? Do you trade them? Have you ever thought about it?
No, my view is that, because again, everybody is different. Some people might have bought at 600 and held, whereas maybe other people are trading it, or trading the ETF or what have you. The way I see, whether it's cryptocurrencies or almost anything else, I do trade some indices from time to time, where if markets get to an extreme, I might trade some other asset. But my view is this: if you stay focused and you become highly skilled at taking money out of the market in a specific area, you don't need to go anywhere else. So if you're not trading foreign exchange successfully, you're not going to trade cryptocurrency successfully.
Mic drop.
And that's pretty much my answer.
Yeah, and I think that's a great answer as well. It is a great answer. What about, let's throw this one down. So what about Bitcoin? Have you got any views? I think it just dropped to $4,000 in the last few days. I don't know where it is today, but any views on where you think it might go?
I've kind of always said, and I haven't been very vocal about it because there's no point in even kind of going down that road, but I did send a tweet out some months ago, and it said, if Bitcoin goes to 1,000, still don't buy,
Right.
No, I may have said when it goes to 1,000, but whatever, when or if, whatever I said, still don't buy. So I think that what happens, in brief, the cryptocurrencies have brought in a whole new perspective and a whole new technology, but I think the regulators are going to take over and they're going to formulate their own. So the concept's not going to go away. It's a great concept, but whether or not that specific asset becomes long-term successful is highly in question, because the regulators will just say, we'll just do our own thing. So we're a central bank. We'll just create our own cryptocurrency concept and reformulate a previous idea to customize to their own, to their own interests. And the banks are doing that as well. So that's where it's going. So it's going to leave kind of Bitcoin out in the dark.
Interesting. I actually did say, I said 1,000. I put 1,000 in my chat the other day, saying I think it's going to go to 1,000 before it starts going back up. But you obviously think it's going to keep going down. Okay, so let's jump onto this question here. I think you've answered the next couple pretty well. So let's dive into some of the quick fire ones. How long did it take you to go from newbie to consistently profitable?
My transition was slower at the beginning, but once I really committed to consistent study of price, it was about a year. But again, it was I only eased into it extremely slowly. So it's important to understand. And then, I teach that model to our folks as well, that, there's a process, like an equity building process. And I took some drawdowns at the beginning, but I was moved into it fairly slowly. So about a year, and then the independent thinking bit occurred kind of between a year and 6 months. And I remember, and also that independent thinking marker also marks the day I never went back into a chat room.
Ah, interesting. What about your mental approach to trading? Have you got any special techniques to share with us?
Like I say, I think the way we see the market, if we're coming new into the marketplace, the way we see it and the way we think it should work, it's not up to us. It's not up to us to determine how the market should work, and it's up to us to conform our thoughts and the way we build a relationship with the market on the market's terms. So therefore, you need to engage in a development plan that will produce that connection with you and real-time market structure.
What's your favorite entry setup?
So,
sorry, you got more on that. I don't want to cut you short.
I was just going to say, so whatever parameters it is that you're using, you need to create ways to increase your depth of understanding of those parameters. If you're trading indicators or whatever it might be, you need to understand it at a much deeper level, because when volatility changes, you need to be able to adjust. And this is why I like price behavior, is because it is highly, highly, highly consistent, regardless of whether volatility is high or low, whether there are major events. The price relationships never change. And so when you understand them under all market conditions. Okay, next question.
What's your favorite entry setup?
My favorite entry setup is when it's quite clearly identifiable that price is getting, when price is, let's say, if it's rising, when it's going parabolic, there are characteristics that we look for where, quite simply, over a certain time frame, you can see that it's taking, over the same period of time, it's having to move further to find liquidity. So in other words, let's just say if it's a 1 hour chart, or then you're seeing that the candlesticks are getting longer and longer. And then when it does that into a liquidity pool, then I will look to be taking a short against the move. And so I may take it directly into the move and build like some risk around it, or I may take a partial position and wait for reversal signs and then add to the position. So that's kind of, there's a reversal pattern that I absolutely love. Hard to explain it by voice, but I can say to you I like reversal patterns, but everybody's going to interpret it differently. But this one engages a really a good understanding of price. So there's one I really like, and so that that's the one I'm looking for.
Cool. And what strategies do you use to exit or manage active trades?
So, because I want to speak to short-term traders as well as long-term traders, but again, for the short-term trades, the first exit has to be a limit order, because price may only go there only briefly, because we're trading the volatility. So now that exit position is going to be at an area where we would also anticipate a market. Even if it's a micro market response, we're still anticipating a response. So even if price moves 10 pips, hits that level, and we expect it to draw back 5 or 6 or 7 or 8 or 10 pips, then at least it hit that level and it's taken something out and secured some equity. So it's always a limit order at a very specific place marked by a technical level as it relates to order flow or market structure. For longer term positions, what we do is if we have built a position, then if price starts to really move, and it moves in our favor quite a lot, then we're going to take something out with the anticipation, or call it hope, or that understanding that there is a probability that if we take something out of the market now, we are hoping that it pulls back a little bit, and we'll take the same position size in and try to put it back in at a lower level, so that we're maintaining the same position size, but we're taking the difference out. But the risk is that what if price continues to move even after you've taken some profit out? Then you have lost opportunity. But we're trading. But the thought process behind those profit-taking decisions are the same as they are on the shorter time frames from a price action standpoint.
I'm with you.
So that's that's how we take our profits.
What about your most recommended trading book?
Okay, so I only read about maybe I read one full trading book, and that's Mark Douglas' Trading in the Zone. So that one's worthwhile. I read a few others. I didn't feel there were as much value, so I trashed them. But there is a book where, and I don't remember the name of it, but there's a book where they interviewed 20 or 30 traders, and I kind of quickly went through it, and what I found is extremely important in that book is that with each trader that they interviewed, every trader had they were an independent thinker, and they explained the process that they went through to become an independent thinker. And they all had their own risk model, and every risk model had protective measures. And the protective measures were, what happens when I'm having a bad trading day? What are my thresholds when I say stop, you're done? Because you need to understand your psychological thresholds, because once they're broken, then the way you see your trading parameters and the way you see risk and the way you see probability changes, because toxins start to build up in your system, and there's all sorts of things going on. So every one of these successful traders had a mechanism in place to protect themselves from themselves.
Right. Yep. Makes sense. Now, what if there was one thing you'd recommend any retail trader spend the next month mastering? What would it be? Why? And how could they go about mastering it?
I would say master support and resistance, and don't just go on what somebody else says. But there's structure. There's actually structure in support and resistance, and some support resistance are more valid than others. And there are different types of support and resistance. But I would go in there and not only just look at support and resistance after the fact, you need to engage. So pick one specific type of support or resistance and interact with price when it arrives at support and resistance, and really watch the price behavior. And when I say interact, I mean take a demo account, make some demo trades, put some parameters around it, and watch what price does, because when price breaks through support and resistance, the state of liquidity changes and the price behavior changes. And you may not see it for 50 sample sizes, but after a while you will see it, and once you see it, it will never leave you. So just exercise support and resistance, and don't be distracted by the fact that you want to start trading now and make money now. Be patient, trade support and resistance on all time frames, and interact with price. Keep yourself busy, and you'll actually see things that you never thought you never knew existed, and things that you never thought you'd ever see after a course of some time invested in this, because you don't know what you don't know. You don't know is risk to you.
Yeah, it reminds me of it's actually your old student who's been on the show before, Andre Stewart, who talked about once he saw it, he could never forget it. Right,
correct.
It
exactly.
it was burnt into his brain.
That's right.
Right, what's your preferred broker and trading platform?
Because this is a recording, and that could change over time. I can't really say, but if you want to know, you can email me, and I can suggest a couple that are good right now. It's probably the best way to go about it.
Cool. And your worst trade?
We had some bad experiences with Euro, where I guess we were way ahead of ourselves. We were wanting to short Euro, and like if we went short Euro, like in 2010, it's short Euro at like 130, and it went up to 149. These are for longer term positions. Yeah. Okay, so all the fundamental rationale, and technical, so it all kind of lined up. But the actual fundamentals didn't play out for much later, until after the Euro had rallied, and so that one we had some suffering on that one. But anyway, that would probably be one of the tougher experiences.
Right, second to last question. So, if you could leave our listeners with one piece of advice, what would it be?
Engage in a development process. Don't try to skip ahead, because the market's going to reset you. If you try to get ahead of yourself and try to, go into a place that you're not ready for, the market is going to correct you. So, and that happens. That's just the way trading development is. The market is there to correct us. So engage in the development process, work it out, plan it out, invest your time in front of your computer wisely, be productive, and don't waste any time.
And guys, I would go back and listen to that again. And if you're actually sort of just skimming over it and going, oh yeah, but nah, that's
it doesn't apply.
Yeah, that is great advice. Great advice. Okay, Chris. So the last question of the show is: we'd like you to give us the bones of a full trading strategy. So entry setup, stop loss, take profit targets, market time frame. Basically, something our listeners can have a play with at home this week.
Yeah, so when I see price, my levels are coming off anywhere from 30-minute to 60-minute charts. You can take daily highs and lows if you want, or even if price has not arrived at a big figure in a while. So in other words, a round number like Euro 112 or 114. If price has not arrived at that level in, let's say, more than 3 days, there's going to be some liquidity will accumulate there. So if price moves nice and smoothly, and it's not, if it's not a central bank driven move, because those you need to stay away from, get out of the way. If price is just in the course of its natural daily volatility arrives at, let's say, a big figure, then enter it anywhere in the 04 to 09 area, and put your stop down, maybe open up your stop down below 90, because if price goes straight through the figure, it's probably going to stall in the low 90s before it comes back up and then goes down to 80. Okay, so and believe me, we got even a lot more specific than that. Put your stop, let's say, below 90 to open up the trade. Once it breaks, you'll see when price comes down to that big figure, you'll see if there's liquidity sitting there, because price will start to accumulate. And if it starts to accumulate and breaks down that accumulation to the upside, move your stop up right away and try to get your stop to break even or below the accumulation level, and then go from there. Put your profit, 10, 15 pips away, and just try that. Just trade the big figures. But obviously, the deeper you understand price, the more precisely you'll be able to trade it. But just try that and use that as an exercise as well.
Brilliant. Great. Thank you very much, Chris. So before we wrap up, what's the best way for the listeners to get hold of you?
You can go to protradersclub.com and join the free members area. There's a couple of videos in there. I took a couple years off. I had no free members area, but we've opened it up again. So go in there. You can check out some of the free videos. It's just a wisp of vapor of what's in the paid content, but it gives you a bit of a taste for what we do.
Brilliant. Okay, so a big thank you to Chris for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Chris in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, hope you enjoyed that interview with Chris. Now, let's just recap what's going on here, because there is a lot going on at Trading Nut at the moment, and this is only the half of it. Okay, so A, you've got the Robot Traders Club. Check that out. There will be a link in the show notes. B, you've got the Demo Trading Edu contest. Check that out. There will be a link in the show notes. You can still get into that and still catch up with some of the recordings that of the live training session that's going on at the moment. 3, you've got the fasting. If you want to join in this intermittent fast with me, and guys, I'll do updates on the show if I get enough people. Then let me know in the show notes, okay, on the website. All right, don't message me on Discord. Fourthly, what was fourth? Was there a fourth? Oh yeah, 52 Traders episodes. They're up and live and can be downloaded individually, or you can get the whole lot. Check it out. It's in the members area, or you can check it out below the episodes, I think. Okay, guys. All right, that's it from me. Until next week, have a great trading week, and I'll see you in the markets.